What's up, guys? Welcome back to the Happy Invest. This is Rosco. I want to make this video quick. I want to go over something called payment for order flow, also known as PFOF. Payment for order flow is a compensation and benefit a brokerage firm receives for directing orders to different parties for trade execution. The brokerage firm receives a small payment, usually fractions of a penny per share, as compensation for directing an order to a particular market maker. For example, let's say you have a Robinhood account. You want to buy 100 shares. Robinhood is going to send your order of 100 shares to their market maker. Let's say, for example, Citadel Securities. Citadel Securities is going to receive your order for 100 shares, and Citadel Securities is going to make sure that they get your shares and send them to you, and they get your payment, right? And they fulfill your order. So how does Citadel make money? How does Robinhood make money? Citadel is gonna make a payment of a fraction of a penny, or let's say a penny to make it easy. So let's say for every share that you order, Robinhood is gonna get a penny per share. So let's say you ordered 100 shares. Citadel is gonna pay Robinhood 10 cents. So 10 cents for the 100 share order that you placed, right? So they make 10 cents. And then Citadel has to make money too, right? So Citadel is going to make sure that they find your stock for at least a penny or 2 pennies or 3 pennies less than the price you want it for. So let's say you wanted 100 shares for $10. Citadel is going to make sure that they find the shares that you want for $9.98. And so they're going to pocket the 2 cents different, right? And so think about it this way. Citadel paid Robinhood 1 penny per share, while they are making 2 pennies per share, right? And so that kind of creates a conflict of interest or a big mess in other words. And take it back. Payment for order flow was made in 2000, and it was created by a guy named Bernie Madoff. And Bernie Madoff, ironically, is one of the guys who created the biggest Ponzi scheme in history of the United States. And he did make time for it. And also PFOF has also been criticized by a lot of people that he creates an unfair and opportunistic condition at the expense of retail traders or investors. Kind of like how I said, there's an interest because your order has to get fulfilled, and the broker has to get money because they're not making $6.95 for you to buy and for you to sell. Because think about it, that's how they used to make their money, and now the fee is gone. And so they are relying on their market maker at Citadel, such as Citadel Securities, to pay them for your order, for giving them your order. And now Citadel is going to find shares that you want at a cheaper price and sell them to you at the price that you want. And they use computers that are like fast, like literally like seconds, like smart computers that can find these stocks and just make these orders ASAP, fulfill these orders ASAP. And they do this every single day, all day long, and they make thousands, millions of dollars per day off retail investors and investors in general that have no education or have no knowledge in analytics and analyzing graphs, or just trading in general. And that just creates a big conflict of interest. And so let's put it this way. Citadel Securities, the market maker that your broker uses to fulfill your order, think of it like it as like Google, right? When you're searching on Google, you're searching for for things, right? You're just searching for things, and then you go on social media, for say Instagram, Facebook, and you scroll down your news feed and you see something that interested you, right? And it was like kind of like let's say you were looking at like ponies, like you're looking for ponies for your daughter or your kid or whatever, and then you go on Facebook and you see like pony sell $5 or whatever. It's kind of like an ad targeted to you, directly to you, and kind of like something that would kind of like you look at and you'd be like, hell yeah, I'm gonna buy this, right? That's how there's interest in instead of the securities, because they know everything about the clients of Robinhood, the clients of Ameritrade, the clients of every broker that they handle, because they know the orders of the clients, the stocks that they want to buy, the companies that they want to buy, the companies that they want to sell, the prices that they want to buy. They know everything. And so when you have a company that knows everything, they're going to go out there and do the most to make sure that they make money off of you, because they need to pay Robinhood, they need to pay the brokers, and they need to make money themselves. And that's just a big mess. And it's a bigger mess because, let's say Citadel Securities, a market maker, is shorting a company. Let's say company A. So when you place the order to buy 100 shares of company A for $10 each, Robinhood is going to receive your order and they're going to send it to Citadel. And then Citadel is going to say, hey, okay, this customer wants 100 shares for $10 each. We have to give a penny for every share. So for every share, they receive a penny. So they make about a dollar. So they make $1 off your $100 share order. And Robinhood is going to get paid $1. Citadel, on the other hand, is going to make sure that they get them for 2 pennies or 3 pennies less. For example, $9.97. And now they're selling you 100 shares that they bought for $9.97 for $10, which is not bad, because technically you placed an order for $10, and so they just kind of like got a discount and they sold it to you, right? But let's say Citadel is shorting company A, the company that you want, right? The company that you want to buy stocks from. They shorted the company, and so now there's no actual shares, because all the other shares are owned by institutions or by other shareholders, and the other ones are shares that they shorted, which means that they borrowed the shares and sold them to the market right off the bat. No price target or anything. They just bought when you short, you buy the share at market price, and you sell it. You sell it at market price right away. And so and so that means that they've sold all those shares, right? And so let's say they've shorted the company so much that there's no more actual shares left. And so they're going to go out there and create these IOUs shares, kind of like I give you a piece of paper and that says that I'm going to give you a stock later on, in a month or in 2 months or whatever. The point is that, let's say that you place the order of 100 shares and this company A has already been shorted. So they're going to give you 100 shares of IOUs called synthetic shares, and they're going to give that to you. And they not only did that to you, they did that to millions or thousands of people. And now you have like this big problem. And like, what do you do, right? And that's the thing that we're gonna find out, because that's one of the problems that's going on in the markets right now. This payment for order flow was drastically changed in 2018 when Robinhood came in the game, because all the brokers nobody can compete with $0 fees, right? And so that changed the game, and new regulations and new rules kind of came into play. For example, rule number 605 and rule 606, which display execution's quality of payment for order flow statistics. They're kind of like rules that the SEC put in place, that the brokers and that the clearinghouses, the market makers have to kind of like report, but they're not reporting, and they're creating kind of like excuses to report, and there's just a lot of conflicts with the payment to order flow system, and I think that it needs to change, because it creates conflict of interest, kind of like how I said before. There's an interest for Robinhood to make money because they're not making money off trading fees no more, and there's an interest for Citadel to create fraud so that they can get shares at a lower price and sell it to you and fulfill your orders. And so when you have a system like that, you are looking for you're just kind of like not looking for trouble, but you're just kind of like waiting for the unexpected, because anything can happen in a system like that. And honestly, I just think that the payment for order flow should be changed, regulated in a different way that might work. Or honestly, we can just go back to to trading fees, because when we have trading fees, the broker has no interest in the trades that you're placing. They just want they're gonna get paid their fee, as long as you trade. But there's not gonna be the conflict of interest with Citadel. For example, you know how, I'm pretty sure everybody heard of Robinhood, halting the buying of, of companies like GameStop and AMC. And when you have when you have another company that's fulfilling your order, and that same company is a company that shorted these two companies, obviously they don't want to fulfill your order, and so they're going to create an excuse to block your orders. And so now Robinhood is forced to block your orders because the big company, the market maker, is telling them, hey, no, we're not going to fill your orders. And so Robinhood does not fulfill orders. They're not in the business to do that. And they can't do anything. And so that just creates a conflict of interest, and it's just creating manipulation, and it's just a barrier to the free, to the world of a free market. And this needs to change. And I just wanted to kind of put that out there, because payment for order flow is not new. It's been around since 2000, and how I said earlier in the video, but it's also been changed recently, and it's changed the game a lot. And not everybody, not every business in the United States, like not every firm is out there to make the best decisions, financially for the people. They're making the decisions in the best interest of themselves, because they want to make millions. They want to make revenues for their investors, but they also want to make revenue for themselves at the cost of the investors, like people like you and me. And that's just unfair, and the system has to change. And if you guys agree with this, give this video a like, comment, let me know what you think. Other than that, I hope you learned something new about paying for order flow, and maybe that can kind of help you, manage your investing, and kind of like just look into it and just pay more attention to what's going to come out, because I honestly think that there's something big coming, and the SEC is there's gonna be a major change in this, and hopefully it happens, and it happens soon. Let me know, guys. I'll see you guys next time. Till then, I am Rosco. Peace out.